Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Holy moly donut shop. You guys see the thumbnail, you got the crying bear up there. Guys, the SPY just hit critical macro level, fib level. I've been telling you guys about it, the 561.4-ish, 5-ish level. We hit it. That was the 1.618 fib level. We hit it, and we hit it the day before CPI. Wow, these market makers, man. They love to play tricks on us. But I tell you this, all my fellow sheeps, this didn't really trick us, did it? Come on, guys. We talked about it. We talked about it. Don't act like we didn't talk about it. You guys remember the trend phase, the chop phase? Broke out 550. Once we broke out 550, I mentioned to everybody we're heading into the trend phase. As long as above 550, we are bullish. And bullish it has been. We cleared 555 yesterday. And then look, had more upside. Hit that next macro level, fib level. That is incredible, guys. I tell you this, man. I will tell you this. Most people who trade in the stock market, they fail and they lose and they give up after about 6 months to a year. If you talking to a guy or a girl and they tell you they've been trading for more than 2 years and they have, or 2 years, 5 years, whatever, that's a bad motherfucker right there, okay? That's a bad motherfucker right there, okay? So if nobody told you guys this and you fit the criteria of what I'm saying, you a bad motherfucker. Shout out to you guys because, woo! This was some beautiful price action that we had today, guys. Look at this beautiful price. And I tell you, I mentioned to everybody, we cleared 555.36 to be bullish, right? But here's another sign. Another sign. We look on the 15-minute chart. This was yesterday's price action. This was today's price action, okay? You notice how around yesterday's sell zone became today's buy zone? Guys, these are price action concepts. Price action concepts, okay? All my old school traders out there, if you like 45 years old or older, all my old school traders out there, you guys know what I'm talking about. We keep it price action. We keep it simple. All these younger and newer traders, they're looking for the newest indicator and all these rocket science stuff with their math. Listen, we keep it simple with our price action trading, okay? Yesterday's sell zone became today's buy zone. That was a sign of bullishness besides being above my 555.36 level. We cleared 558.5. You know, I mentioned to you guys that was another level that I had. Cleared it and it just went up from there. Breakout and then boom, hit that macro level, fib level. That is incredible. But we got CPI tomorrow. Holy moly. How are we going to deal with this? How are we going to deal with this? The last few CPIs, guys, that I've seen has been bullish. I think the last bearish CPI we had was like March or April or something like that. But the last few has been bullish. But I mean, we're rising up into CPI. You know what I mean? Usually I see something like this happen. CPI causes a dump. But I tell you, we got to stay open-minded to any situation, any scenario. Right now, the price action has been bullish and we're still in the trend phase. We don't see a sign of the chop phase just yet. We don't see a sign of a pullback just yet. What would be a sign? When we lose critical support levels, when we get false breakouts, when we get exhaustion gaps. Now, if the data comes out a certain way and the market reacts with dumping in the pre-market, it's going to look like an exhaustion gap on the daily chart because my daily chart doesn't show the pre-market and after-market activity. So that's what bears are going to need. They're going to need CPI to come out a certain way and for the market to react with fear, a dump, profit taking. I mean, who is pushing this market up? How much? I mean, when's a good time to take profits? Whales and market makers? You guys tell me. And they're going to tell us through the price action and we don't argue with it. Okay? So now that we hit this critical resistant levels, when do we trust the rejections? You guys should be able to tell me by now. But I'll tell you just in case. We trust the rejection when it's strong enough to break down support. And I have support at 560, 558.5, 557, and 555.36. It needs to be strong enough to break down these support. And below 555.36, because that is a critical fib level, that will be one hell of a false breakout setup, giving us reasons based on the price action, not bias reason, but based on the charts, the price action to be bearish. Putting the lower targets in play, one level, one setup at a time. You guys understand what Uncle is saying. But But, guys, if we clear 561.5 tomorrow, it is bullish. If we gap up above it, it is bullish. Either way, above 561.5, it is bullish. The lowest we want to go, if you're a bull, the lowest you want to see SPY go for, maybe for a healthy pullback, you don't want to see it go no lower than 555.36 because that's a fib level, critical level, and we cleared it officially. For 2 days now, we cleared it officially. So a breakout, a breakdown of that will be a false breakout. You don't want to see that. Okay? You want to see, even if we get a pullback, you want to see that level defend as support. Prove itself that there is buying pressure there. Because if there is, we are still, in the short term, still bullish. Okay? So if we want new all-time highs, 561.5 clear. Let me zoom out a little bit before we move on to see what the next macro level fib. It's at 583.63. That is a long way. That's like another $22. All right, another $22, $23. So I don't think we have to worry about that level yet. But, you know, just to let you know what the next macro level fib level is at 583.63. Can you guys imagine if SPY hits that level? Holy moly. But who would have thought SPY would be at the level it's at now? 561.3 is where it closed today. Guys, remember the plan. CPI tomorrow. It's going to cause a gap up or a gap down. But remember the levels. Above 561.5, I have no levels until 583.63. So if it gets above that, we'd have to let the market identify levels where the buy and sell zones are. Or you can just go $1.50 to $2 increments. Okay? Now let's move on to triple Q. Look at that. I mentioned to everybody, above 497 is bullish. We can't get bearish unless it break down 497. Go on and peep the last video. And what happened? It cleared 500. We had a rejection from 500 on Tuesday. And I mentioned all the time, you trust the rejection when it's strong enough to break down support. In this case, that rejection from 500 did not break down support. Why do I say that? Trust the rejection when it breaks down support. This right here is an example why. Because it got the rejection, but it didn't break down critical support. You guys, that's why I said don't get bearish unless we break down 497. That did not happen. What happened was we treated 498.5 as support and cleared 500, and we went to a high of 503.5. What was the levels I gave you guys? What were the levels? Above 500, I said 502 and 503.5, and above that is 505. We managed to get to 503.5. These are not predictions, guys. This is a pure price action analysis, unbiasedly. And you guys, if I can do it, you guys can do it. Now, when do we short? You guys should know already. We short when we break down support, exhaustion gaps, or false breakouts. So what are the levels for triple Q? 502 and 500. To start, we got to break those levels down or gap below it. Break down 497, I'd be bearish. Okay? Otherwise, if we clear 502, well, we're above 502 now, and we did clear that level. But if we clear 503.5, 505 or higher is in play. New all-time highs. A lot of people's going to try to call a top. Don't listen to nobody except for the price action. Okay? And if you guys wonder why Uncle Charles seemed high energy today, it's because I had some coffee, guys. It was some good coffee, too. It was good coffee. Anyway, Tesla. Look at that. Close even higher. Oh, look like a green doji candle. Close a little higher, okay? Can you guys see that? I know I have a lot of lines. Those are my levels. All right? When is it going to be pullback time? We got a big body green candle followed by a doji. If it is an evening star pattern, the evening star pattern has not been working. But if it is, that third candle must play out. And it needs to be either a gap down or a big body red candle. Breakdown of support. Where's support? 261.5 and 260. If those levels fail, get bearish. Below 258, I would be bear bias on Tesla in favor of a deeper pullback. The evening star pattern will be playing out. All right. If there is no evening star pattern, because a lot of time we get a big body green candle followed by a doji that's just like, it's just to take a break, a cool down, and then it goes even higher. And if that's the case, we trade it unbiasedly. Don't argue the price action. So if it clears 263, and if it clears 265, bullish. We are bullish with 267 and 270 in play, guys. All right, let's move on to NVDA. ever since NVDA recaptured that level, false breakdown setup from 126.7, I mentioned we are bullish, and it is looking bullish, and it continues to be bullish by clearing another level. Cleared 134. The next fib level I got is at 135.9. I'm going to round it to 136. I tend to do that sometime. But if it clears 136, that is very bullish. At 138 or higher in play, I got next fib level around 140.76. That could be a possibility. But it's going to have to clear 136, all right? When do we get bearish? When the price action tells us to be bearish. And when the price action tells us to be bearish, it usually does what? Break down support, give us a false breakout, or maybe an exhaustion gap. I think I said that a lot of times in this video. I'm trying to get you guys to understand. I don't want you to call a top. I want you guys to know the levels and setups and trade it unbiasedly. So, when do we get bearish? When it breaks down support, starting with 134, 132.5, and 131. If those levels fail, 129.4, 128, and 126.7 would be back in play. Now, a test of 126.7 would definitely be a big test because that's where the last trap was, the false breakdown setup. That's where the last trap was. So a loss of that level would cancel out the trap and be a big win for the bears, okay? Follow the price actions. Let's move on to the dog pool. 555.77, and then 31% of activity came at 557.7. I'm trying not to get a tongue twister here, guys. And then 15% of activity came at 560, which is actually one of my levels, guys. Billions and billions of dollars. Well, the 560 level was 200 mil. That's not a lot. The 557.7 level, that was 411.6 mil. Not a lot. And the 555.7 level was 700 mil. You notice these are all below the billion. All below. So that shows us that the big money is easing back a little bit. They may have already be in the position they want and they're ready to pounce, which could be why they're easing back. But we'll see. We'll see. Price action is the shove. But SPY, let's see what the flows say. It's bearish. Can it be right? Let's see if Triple Q agrees. And it doesn't. It doesn't agree. It's more powerful when these two agree. And right now it's not agreeing. Triple Q is still bullish. Tesla, bullish. And NVDA, bullish. Holy moly donut shop, guys. And that's it. That's my price action analysis, unbiased for you guys. Hey, if you guys like this content, definitely like and subscribe. Definitely consider joining my Discord and be part of the Sheep's Den. Hallelujah. Peace.
You